Hello friends, welcome to my channel Simply Stocks, and today I'm going to talk about Tata Chemicals, which is on a cusp of something special. With the kind of correction that has come in, it looks extremely attractive from these levels. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Tata Chemicals, here's a small request. Can you support me on Patreon? Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot get the Patreon membership, you can get the WhatsApp membership through an yearly membership. Now, about the company, established in 1938, Tata Chemicals produces a number of soda ash and specialty chemical products. Their different products include sodium bicarbonate, allied chemicals, products for cement and infra industry, among others. Have operations in Asia, Americas, Europe, and Africa, and the market cap of the company is around 26,000 crores, and it has corrected from the top decently, so looking attractive. If you look at the numbers, these are the financials for Q1. So I'm analyzing Q1 numbers because this presentation was made about 2 months back, and I was analyzing this, and due to the conditions at home, I was not able to do the Q2 numbers analysis, but even those were pretty impressive. I just had a glance just now as to how those numbers panned out. So they were in line of what has been happening for the last 3-4 quarters. So even if we analyze the Q1 numbers, we'll come to the same conclusions. So sales went up by around 33% in Q1. Profit jumped by 85% to around 640 crores. It is a virtually zero debt company. There is some debt, but very low considering the kind of business that they are into. There's low promoter but high institutional holding at around 40%, which is pretty decent. ROE of around 8% is quite low, and they are looking to increase that. That is what it seems by getting into a different kind of, you can say, complicated specialty chemicals. But margins at 25% looks pretty decent. So if you look at the results at a glance, the June numbers at a glance, margins were up 500 basis points year on year and were up 700 basis points quarter on quarter. So quite a decent performance in that sense. And the margins were up something like 500 basis points compared to June 2019. And why I'm considering June 2019 as a benchmark is because of the pandemic that virtually, you can say, stalled many businesses for 2 years. So that's why we are looking at 2019 or FY20 numbers rather than at FY21 or 22. So for comparison, FY20 looks good. And so in that sense also margins have increased. What that shows is that they are back to the pre-pandemic level. In fact, they are doing better than what they were doing pre-pandemic. Reserves has consistently increased and have doubled over the last 5 years, and sales growth of over 50% from FY19 is commendable in a very difficult environment. The company has done exceedingly well to show such kind of growth, and probably most of that has come from abroad, but things are looking pretty bright for the company. All divisions are performing well in a very tough environment, and demand hopefully should only pick up once Europe recovers and Americas recovers from this, you can say, semi-recession. I don't think they're going to get into complete recession. And I think we could see a recovery from summers next year. So probably another 6 months of pain for companies, you can say, exporting to Europe and US, and things will look even brighter for something like Tata Chemicals, because I'll show you the breakup, geographical breakup, and you'll understand as to why this is just the precursor of a better set of numbers that could come in in second half of FY24. Numbers are set to improve. I'm pretty confident about it, and there's a clear play on global economy. So at this point of time, when everybody is moving away from companies which are exposed to global picture, I think this is time to probably start getting into them. I think major corrections, especially in most of the large cap IT companies, as well as chemical companies, or companies in pharma or other sectors which work, say auto ancillaries, which have their businesses abroad. I think this is the time to get into them. Major corrections in them have taken place, and if you have a 3 to 5 year time frame, this is the best time to accumulate such kind of stocks. If you look at the revenue picture, then FY19 they had a revenue of over 11,000 crores, as you see with this slide, but it had a dip, a major dip during the pandemic and in FY20 and 21, but they have recovered smartly, and FY22 saw the similar amount of, you can say, sales numbers as FY19. So numbers are coming back, and this year the sales number will be totally different. There is a clear 30-35% sales growth that we see because of acquisitions, because of other things, but they are doing well operationally as well. In terms of profits as well, you see around 1400 crores of profit came in FY19, and again around 1400 crores in FY22. So the recovery has been quite magnificent over this period. So they are again back to the pre-pandemic level. And also on margins front, if we look at the margins picture, even on operating profit margins from around 17%, it dipped to around 15%, but now is back to around 18%. It is quite stable around 18%, which tells us that the margins also are coming back, and that's why profitability has increased sharply, because sales numbers have grown quite decently over the last 3 years, as I mentioned, by around nearly 50%. So if you see the sales segment-wise breakup in terms of the products that they sell, so basic chemicals are about 75% of their total business, where specialty chemicals contributes to around 25%, and this 25% has around 14% of chemicals which are of high grade, which are of you can say very rare in terms of the companies that produces them, and that's where they make a lot of you can say profits as well as margins, plus they export those to countries like say Great Britain and to places in Americas, and so they have greater margins there for sure compared to selling them into, you can say, developing countries. If you look at product-wise performance year on year, again these are June numbers that I have compared. So basic chemicals had a growth of around 42%. Specialty chemicals had a growth of around you can say around 30% or so. It's not non-applicable, but around 30% growth in specialty chemicals. Margins have gone up sharply, 9,000 basis points, so nearly 9%. That's what I'm saying, from 16 to around 25 is what has happened with basic chemicals. But in specialty chemicals, the margins have dipped by around 4% or so. So that's where the company needs to look at that their major part of the business, or you can say the numbers pick up from these. But even with 8% margins in specialty chemicals, because of the pickup in the basic chemicals which they also export, the numbers have looked good on the bottom line, plus other income has also boosted the numbers. So overall there has been a very decent sales growth that has pushed up the numbers, because there are not many you can say expenses that come in. It's a pretty simple business altogether to understand, and the margins in the basic chemicals division has gone up so much that is covered up for the specialty chemicals drop down or drawdown that we have seen so far in terms of margins. So overall margins have remained stable. So after looking at the margins picture for the complete business, let's look at how the performance or how the performance in terms of on the ground with respect to the total business has been. So this is the basic chemicals business as to what all products that they sell in terms of the basic chemicals. So they sell soda ash big time, that's around 56%. Sodium bicarbonate contributes 4%, and salt business is around 11.5%. So in this 56% of soda ash business, there are number of components that they sell which have higher margins, and there are number of components which they sell which have lower margins, and that is where they are making most of their you can say sales, and you can say revenue pickup that is taking place at the moment because of the exports of their soda ash, which is required in a number of, you can say, businesses altogether, or number of products and manufacturing of products and building materials, etc., altogether globally. In terms of the geographical breakup, and this is what exactly I was talking about a few minutes back, is that India contributes 25% of their total business, and Europe, along with the rest of the world, contributes, Southeast Asia, etc., contributes around 10%. Americas is 65% of their business. So they are not quite, you can say, having, they do not have a major exposure to Europe, especially to England, where there is a chance of a complete recession, and there's a lot of issues with inflation and you can say growth. But they have a major portion of their business coming from US, and US is also under stress. So basically, once things stabilizes in Europe and US, around 75% of their business will be taken care of. So I think from FY24 onwards, especially from second half of 2023 calendar year, things will look extremely good from July, August. I'm very hopeful of that. So probably a consolidation phase for the stock in a 15-20% range for the next 4 or 5 months, but there is a clear sign that the stock could even double from here within 18 to 24 months if the numbers keep on coming up, and if people do see, or analysts and large investors do see a lot of potential with respect to their global business, which should pick up once things normalizes in Europe and US. Some of the important pointers that we have to keep in mind: company is world's third largest soda ash and India's leading vacuum evaporated iodized salt producer, and it demerged its spices and salt business, transferring it to Tata Consumer in FY20, and that helped. After the demerger, the business became more simpler to understand, and also simpler to probably handle and manage over a period of time. And over the last 2 years, things have looked pretty decent on the numbers front. The production plants are spread across 4 continents and not just here in India. And basic chemicals are high volume and low value products, although specialty chemicals are high value in nature, as I mentioned. And most of these specialty chemicals, they do export to countries like Europe and US. And the products have wide range of applications. So they have application in industries such as nutrition, agriculture, paints, oral care, cosmetics, soaps, detergents, animal nutrition, glass, textile, leather, rubber, pharmaceutical, etc. So complete, you can say, complete brochure of a lot of products in different industries that their products are being used. And that's why I did not mention it in, you can say, in a snapshot, because you cannot say that okay, their basic chemicals are being used in this industry and only, and if this industry gets hurt, say a pharma industry, and pharma industry gets hurt, then their business will get hurt. So there's a complete you can say diversification of their products. So that's why products or soda ash or other kinds of products that Tata Chemicals make will always be in demand. It's just a factor of whether China will get into it big time or other countries will get into it big time, and so their margins may shrink, which it doesn't look like for the foreseeable future for the next 2 years or so. And that's where I feel that okay, the company or the stock did extremely well last year and to the initial part of this year, calendar year, but now probably is the time to look at the stock again, because the consolidation has already taken place for the stock and the business. I think things should look better from middle of 2023. In terms of valuations, I believe that current EPS for FY22, the EPS has been around 49.50 rupees. I feel that in FY23 they should have an EPS closer to 95 rupees, 93 rupees or so. Their second quarter number has been pretty decent, so I won't be surprised if they come out with 100 rupees of EPS for this year FY23. It is currently trading at, if I take 93 rupees as an assumption for the FY23 EPS, then it is currently trading at only 11 times FY23 earnings, which is not expensive, but you need to understand that Tata Chemicals has had a history of trading at lower valuations. So in terms of price to sales, it trades at between 1 to 2 times, which is trading at the moment 1.7 times sales, and it trades at between 10 to 15 times earnings. But I think there will be a PE re-rating in the stock with the kind of numbers that it keeps churning out. So FY24, uh, I see more traction, as I explained, leading to better profitability. So expected FY24 EPS should be close to 130 rupees. There should be a 35-40% growth, and based on that I see the stock trade at around 17-18 times at least, even 20 times. Hence a target of 2000 is very much possible. I believe 2500 is a possibility as well over the next 2 years. On the stock by end of 2024 we could see the stock trade between 2000 to 2400. That's my assumption. Again, take your own call, do your own analysis, and then take a call on that. In terms of technicals, there's strong supports around the 1000 levels. It is currently trading at those supports, and that's why I came up with this video, because it looks extremely attractive at around 1030, 1040. 980 is your, you can say, short term support. If there is a deep market correction, yes, the stock could go to 920, 930, but that will be a golden buying opportunity into the company from a 2 year point of view. So we could see a positional uptrend from here as well. There could be a reversal from around the 1000 levels as well. So in my opinion, what one can do is, from a 3 year point of view, it looks extremely good. Somebody who's holding at higher levels can average around 980,000 levels. Somebody who has not bought into it and have, you can say, funds to buy, then they can buy around 5-6% of their total holding into something like Tata Chemicals at around 1000 rupees, and at current levels as well. It looks like a consistent performer over the next 2-3 years and should do extremely well over that period. I won't be surprised in 2025 if we see the stock around 2500, 2700 at least. So this was my video on Tata Chemicals. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.